I see a potential path with Tesla worth more than Apple and Saudi Aramco combined. That's what Elon Musk just said on the Q3 Tesla earnings call. Hey, it's Vinny. So now, is all this really possible? Well, let's take a look. Here's the four main segments of Tesla. We've got the automotive business, which is obviously the vast chunk of the company right now. You got the energy business, which is in its infancy but growing and potentially could be bigger than the auto business. You got full self-driving, you've got Tesla Bot. Now, obviously, these two are a little further out, but full self-driving, Tesla Bot could potentially be worth more than the whole thing combined. So the way I see it, Tesla really only needs to hit on two of these four things, hit it big to probably become the most valuable company in the world. If they hit on all four of these, I mean, there's no doubt in my mind that they will be the most valuable company if they can really succeed at all four of these products. If we look at auto, their goal is to sell 20 million vehicles in 2030. Can they get to 20 million? Remains to be seen, but I like to go the conservative route here. Let's say they get to 10 million vehicles sold. That's about the number of vehicles that Toyota sells over the last 4 or 5 years. It's around 10 million. So let's say Tesla can sell 10 million vehicles. Average sale price 50,000. That would bring them $500 billion of revenue. And let's just say their take rate, let's say, is around 15,000 on every car. So we're talking about 150 billion in profits. Now the energy segment is, I think, much harder to value. It's just too early to accurately get anywhere close to what this is gonna be worth. Best case, it's bigger than the auto segment. Worst case, it is just like the AirPods to Apple's iPhone, right? But I think energy will be huge. We're already seeing the benefits of energy, and it is starting to grow rapidly. So that's a wild card, I would say. Now, as far as FSD and the Tesla bot, obviously a little bit more speculative, but the value that these can create with FSD especially is much further along. Obviously, the Tesla bot is very new relatively. Full self-driving, as we're going to see in the report, they're saying is safer than human drivers already. I mean, FSD is worth more than the rest of the business combined. If this really works out the way that they're saying, it won't make sense for humans to drive anymore. The car will drive itself. If the car is safer than a human, another paradigm shift, robo taxis. You may not even need to buy a car, and obviously this changes the whole game. Not everyone would need to buy cars. It makes more sense to just order a robotaxi if it's so much cheaper and more convenient. There is an insane amount of potential there. Obviously, these things remain to be seen, but we do know FSD is rapidly improving and it's starting to expand, probably to a wide release beta this year. We'll look at what they said in the earnings report in a second. So FSD potentially dwarfs everything else. It's very hard to quantify. FSD and Tesla bot, these things will change the world if they really succeed. So that's the way I see it. Is Tesla has these four segments, of which any one could probably make it the most valuable company in the world if they really execute at a high level, like they have been. If they really hit it out of the park on two of these four, no doubt in my mind, it's the biggest company in the world. And if they can really do all three or four of these things well, it's over. It's over. They will absolutely be the biggest company in the world. So let's take a look at some of the other important things from their earnings report. First of all, let's look at this chart on the right here. Tesla's operating margin. Tesla's the red line here, the auto industry is the gray line, and the S&P 500 is the blue line. Tesla's operating margin is about double that of the auto industry right now, okay? Maybe theirs is around 7, 8, Tesla's around 16%. The S&P 500 is just under 15%. Think about that. How many software companies, technology companies make up the S&P 500 that have very high margins, lots of software-based revenue, and Tesla on average has a higher operating margin than the S&P 500 collectively. Obviously, there are companies in the S&P that have a higher operating margin than Tesla does, but I mean, just look at Tesla here, how quickly it's going up. And when you think about what they have in the pipe here, I mean, how does this slow down? How does this not just keep increasing? Even if it stays flat where it is right now, they're already leading. They already have a better operating margin than the average of the S&P 500, which is pretty incredible to see in such a short amount of time. I mean, just 2 years ago, 3 years ago here, they were not even profitable. This is why I'm really trying to look far out here, because obviously there's a lot of noise. There's a lot of crap going on in the short term. The whole market is kind of being dictated by the macro and the Fed, but this is why I think we need to keep an eye out for the long term here, because this long term potential dwarfs any of this short term nonsense. So their free cash flow is rapidly growing. They got 3 billion in Q3, 9 billion for the last 12 months, and they're looking to a record breaking Q4. Q4 should absolutely blow it out of the water, be their best quarter of the year here. Q4 is looking extremely good. Now, as far as the production ramps, they're coming along pretty well. Giga Berlin achieved a milestone of 2,000 cars made a week. Giga Texas is almost there. Their production of 4680 battery cells has tripled in Q3 compared to the previous quarter. These are all very bullish for the company. These are going to be huge revenue drivers in the future. Just think when Texas and Berlin are fully ramped, what happens with these profit margins. So the 4680 cell, there was some worries about the production, if it was going to get bottlenecked, if they would be able to achieve mass scale, but it's definitely coming along. Now, AI Day, this is what I've said, a lot of people poo-pooed it, but regardless of what they unveiled at AI Day, I thought it was pretty incredible. But more importantly, it was a recruiting event. And Tesla, we've seen a massive influx of world-class artificial intelligence engineers and scientists applying to work at Tesla. That's huge. Just think about that. They were already, Tesla and SpaceX number one, number two most desired places to work for these software engineers. And things like AI Day just increase that. I mean, all of these aspiring, the best of the best are going to want to work there. I don't think we can kind of state enough how important that is. These are kind of the things you can't really value in the business right now, but are going to become very apparent, in 5, 10 years. If they have the best people working there, I mean, it's a no-brainer. This quarter, they're expecting to go wide release of the FSD beta in North America. So it's obviously improving. They're feeling more confident in it, that we can go to a wide release. I mean, these are all great signs. And this is a big part I briefly mentioned earlier. The safety that we're seeing when the car is in FSD mode is actually significantly greater than the safety we're seeing when it is not, which is a key threshold for going to wide beta. So the FSD in many cases already showing that it is safer than a human driver. Q4, we expect to sell every car that we make, and that goes for as far into the future as we can see. We're still a very small percentage of the total vehicles on the road. Of the 2 billion vehicles on the road, we only have about 3.5 million. So again, this is just getting started. And if you're looking at their share of the EV market, you're looking at it wrong, because this is about the total market. Every EV sold is one less ICE vehicle sold, and that's what truly matters. It doesn't matter, who controls what percent of the EV market. It matters what percent of the entire market you have, because that's where we're headed. Sounds like we're going to get some buybacks potentially next year in the range of $5 to $10 billion. And this was pretty bullish, even in the downside scenario next year. Even if next year was a very difficult year, we still have the ability to do a $5 to $10 billion buyback. So they're clearly very confident in their ability to continue generating huge amounts of free cash flow. And this must mean that they're so confident in everything they're doing that they don't have a better use for this cash. Now we have the opinion that we can far exceed Apple's current market cap. As I mentioned earlier, can potentially be worth more than Apple and Saudi Aramco combined. Now that doesn't mean it will happen or that it'll be easy. Obviously, it's going to require probably 5, 10 more years of killing it, executing very well. But just looking how far they've come in such a short amount of time, I think that it's possible. We have an incredible product portfolio. I think we've got the most exciting product portfolio of any company on earth, some of which you've heard about, some of which you haven't. Wink, wink. There was some mention of cheaper cars coming. And I think that that's very true. I mean, who is doing something that's cooler than Tesla right now? I mean, the EVs were huge. Now they've got a full self-driving program. They've got energy. They've got a Tesla bot. Oh my goodness. We did kind of get a hint at Tesla releasing some new vehicles eventually. One of the criticisms of Tesla has been that they only sell these luxury premium price vehicles. Well, it sounds like in the pipeline, in the design, somewhere, again, there's no reason to make a cheaper model as long as they're still selling every S3, X, and Y that they're building. But if demand did start to slow down, they're working on a new model that they would basically be trying to make 2 cars for the amount it currently takes to make one Model 3. And that's how they could get to making a cheaper vehicle and still have a pretty good take rate on that. So it makes sense to me, because the cost to make these vehicles as they continue to innovate is just going to keep coming down. So yeah, if they can make a car that's half the price of the Model 3, or make 2 cars for the same price as one Model 3, you probably can sell it at, at a price that unlocks a whole new market. So I think that that's something they obviously don't need to worry about for right now, since they're selling every of these premium model cars that they make. But eventually, it's good to see that they are thinking about that. So I think 2 of the most significant things that were said on this report was that the fact that they came out and said that full self-driving is significantly safer than manual or a human driver already is incredible. That just kind of tells you how fast these things are moving. So I think that that's great. And I mean, if they're saying that Elon thinks Tesla can be bigger than Apple and Saudi Aramco combined, what more do you need to hear? So let's see how they execute for the next 10 years. Let me know. Do you guys think that that's possible? What were your thoughts on the Q3 report and Tesla's future in the comments below? This is Vinny from the Investment Club, and I'll see you next time.